All right, guys, this is Juan here with Tech Your Life, and today we're going to be talking about GameStop, Robinhood, and what happened. Man, lately I've been getting a lot of questions about this because my first video at Tech Your Life was actually how to buy stock with Robinhood. And now that Robinhood and GameStop are in the news, a lot of people want to know what happened. So I'm going to give you guys just a quick explanation so that you guys can understand what happened and you guys can make decisions on what you want to do. Now, anything in this video is not investment advice, all right? Full disclosure, I have Robinhood. I use Robinhood to buy my stocks. Like I said, I made a video about this. And so, you guys can do whatever you want. For the moment right now, I have not made a decision on whether or not I'm going to keep Robinhood as my online broker. Right now, I still like their services. I understand what they're doing. And so right now, let's just get into it. Let's explain. The first thing that we want to talk about is what happened. So basically, some people on the internet decided that they were going to stick it to the hedge funds, the big guys that buy stocks and trade stocks all day on Wall Street. So we're going to break this down and figure out what happened, and then you guys can better understand that, okay? If you like this content and you're getting value out of this, please like this video, share this video, and subscribe to the channel for more information. This is Tech Your Life, and these two companies are part of tech, and so I think it's important that you guys understand what's going on. So the first thing that we need to talk about is short selling, all right? So what is short selling? Short selling is this. This is when a company believes, like a hedge fund, a big company on Wall Street that buys and sells stocks, they believe that a company is struggling so bad that their stock price is going to be going down, okay? So let's say we have GameStop and their share price is $100 per share. We're going to use simple numbers so that it'd be easier to understand. This hedge fund believes that this stock is going to be going down in price, and they kind of have an idea of how long it'll take for that price to go down. So what this hedge fund will do is they will borrow stock. They're not buying it. They are borrowing it from someone else that owns the stock. And they'll say, all right, I'd like to buy this stock or borrow this stock from you, and I will sell this stock online right now. They're gonna borrow the GameStop share, sell it for $100. The person that owns the share, they still want that share because they're long on the company. They believe over time that company is going to do well. So they don't want to get rid of the share, but they maybe want to make some money on it right away. So these hedge funds, they'll buy the share for $100. They believe, let's say in 2 weeks to a month, that this share is going to go down in value. So what they do is they will take that share, sell it, okay? Then when that price goes down, okay, they will buy another share at the lower price. Let's say it went down to $50, all right? They'll buy the share at the $50, and that difference between the $100 that they sold it for and the $50 that they repurchased it for, that $50 is profit that goes to the hedge fund, and the person that owns the share will get their share back, plus maybe a little bit something on the side for allowing them to do this. Well, these hedge funds have been doing stuff like this for years and years and years. This was part of the thing that caused the 2008 financial crisis. And so now what happened was there were some people on the internet that were doing their research, and they realized that these hedge funds were overcompensating in their short sales for GameStop by 140%. What that means was that they were borrowing more shares for this stock than they were actually on the market by like 40%. So they realized, you know what, this is an opportunity to stick it to these guys. So these people on Reddit go and say, hey, we need to buy the share. They talk to all their members in their subreddit group and say, guys, let's buy the share, and this is going to create demand. Now, when there's more demand for something, the price goes up, okay? And so now, because the price is going up, the people that said they were going to sell that share for less money or to rebuy it and give it to the person they borrowed it from, they are now beginning to lose money. all right, because the share is going up, it's not going down. So now they are losing value, but they had a contract with the person that they borrowed the share from to give that share back in a certain amount of time. And so if they don't do that, they will lose a lot of money. So what do these big guys do to try to compensate for that? Well, the only thing that they can do is ride this wave. So they will buy separate shares on their own with their own money so that they can recoup that profit. And then that way they'll, let's say they'll buy 2 shares, 1 share for themselves to get profit, and then 1 share to pay back the person they borrowed that share from. And so now these guys are having to buy lots of shares, because when they are shorting a stock, they're not shorting it with just 1 share. They're doing it hundreds of shares, thousands of shares. And so what this is causing is more demand, because these hedge funds are buying more stock to get that profit back. So it's only creating more demand. So it's driving the stock price up. So not only are these Reddit guys, they probably paid like 20, 50, $100 for the share, and they're done. That's the only risk that they have. So if that stock goes back down to 0, that's all they have to worry about. But these hedge funds, because they were shorting the stock thousands and thousands of shares, there's a lot of money on the line. And so they're trying to buy these shares to raise the price so that they can recoup their losses. But the problem is the price keeps going up. And so some of these hedge funds are not that big, and so they have to borrow money to buy these shares. So now not only are they losing money on their short position, now they have debt on their books and they have to pay back these people. So where does Robinhood play in all of that? Well, this is what happened. Robinhood is a free company for online trades. So with this service, I showed you guys in my other video, I'll link it right here. With this company, you'll be able to, buy a stock and own it and hold on to it. And if it increases in value, you get it. If it decreases, you get it. Now, none of this is investment advice, but you can pick a stock that you want to own and own it using the Robinhood app. So Robinhood, because they are not charging us to do this service, how do they make money? Well, one of the ways that they make money is the data that we give them with our buying habits. They take that data and they give it to these hedge funds. And they take that data and they analyze it to say, hey, there's a trend for this stock. We need to get a position. Or people are beginning to sell this stock. We need to get out of it. And so Robinhood's main customers are not us. It's actually the hedge funds. And so there's this rumor going around. I'm not corroborating this. I'm not saying that this is true. This is just what's being alleged. But they're saying that these hedge fund people are going to Robinhood and saying, Robinhood, you need to stop allowing your people to buy this stock because it's making us lose money. And if you don't do that, we're going to not accept your orders and we're not going to be doing business with you anymore. So Robinhood's a business. What are they going to do? They stop trading. They say that people on Robinhood, like myself, we cannot buy these shares in GameStop, American Airlines, and these other companies, because if we do, we're going to raise the price. These big people are going to lose money, and then Robinhood could potentially go out of business. Well, in an open market and in a free market, we're supposed to be able to buy and sell however we want. I used to work at a bank, and when it came to talking to people about stocks, the first thing we told everybody was invest at your own risk. If you buy something and it goes up, fantastic. But if you buy something and it goes down, you will lose money. And when you buy stocks, it is not protected by the federal government. So we should be allowed to be able to make our own purchases of stock. We should be able to. So for Robinhood to be able to go and say, you guys are not buying these stocks, or limiting us as to how many. Right now, I believe the limit is you can only buy 1 share of the stock. What it's doing is it's allowing the people that had the stock, they can't buy more, but Robinhood says you can sell it. And so if the only thing you can do with this stock is sell it, what's that going to do? With more people selling the stock, it's going to drive the price back down. So then these big guys take out new short positions on these stocks. And as that price starts going back down, these hedge funds start making even more money. You see how that's crazy? And so this is a big deal This is just a simple video for you guys to understand what happened, what's going on. If you have any questions about this, leave comments below. If you got any value out of this, please subscribe to the channel, share this with your friends, hit the like button, and I'll be looking forward to talking to you guys. Like, again, I own stock using the Robinhood app. I use them to purchase my stocks, but that doesn't mean I'm not going to be able to talk about what's going on. This is just my opinion. This is not financial advice, but if you did get some value out of this, let me know. Let your friends know, and tell me what you want to do. Who do you think I should go to? What company do you think I should switch, who I change my portfolio to? Because Robinhood does give you the option to take the shares that you have with them and transfer them to another broker. And so if you guys have any ideas on who I should use for that, let me know. I'm open to any comments and suggestions. Thank you so much. You guys have a great day, and don't forget, tech your life.